and welcome to Power Breakfast, powered by Investonomics, an initiative by ICICIdirect. On the show today, we have with us Group CFO Blue Star, Neeraj Basur. Neeraj, thanks a ton for joining us today on the show. Neeraj, earnings season is now behind us. What is the business outlook looking like? We're also coming towards the end of the summer season and hopefully on a positive, topping out of the second COVID wave too. When do you expect things to normalize? What is business really looking like on the ground?
Thank you very much for having me on the show, Samina. Yes, of course, we are also eagerly looking for the second wave of COVID to taper off and the business environment and the markets to start opening up somewhere in the month of June. So talking about the current quarter, of course, the quarter started off on a very positive note. The month of April, the first 2 weeks were as normal as any good summer season can be for an AC manufacturer and seller like us. However, subsequently, different states have imposed lockdown or lockdown-like restrictions in a sequential manner. And that has indeed impacted the sales, specifically in the month of May. However, we think that the impact will be limited to Q1. And once in the month of June or starting June, as the markets start to open up, even if it is gradual opening up, we have experienced last year, and our sales teams are raring to go, and they are all geared up to restart the business activities as early as they will be allowed to do that. Also bear in mind, in North India, the summer season carries on right up to the month of July or even August at times. So there is definitely a hope and an expectation that to some extent, whatever we can salvage this lost opportunity of the month of May, we would want to, and we should be able to do that through the months of July and August. Now, keeping in mind again our experience from last year, Q2, Q3, and Q4. So last year we were able to recover our, and I'm talking room ACs, the selling levels or recovery was around 80% in Q2. Q3, in fact, we experienced a 17% growth, and Q4, of course, was a 31% growth. And now, if that experience is to be followed again, we see no reason why financial year 22 as a whole in entirety, we should have some growth over FY20. So our baseline is not FY21. We are now comparing ourselves with FY20. So we are definitely hoping for around 10% growth in FY22 as a whole, notwithstanding the disruption of these 40-45 days, which we are currently going through.
And Neeraj, I just want to dip into and break the verticals down. So let's talk about room AC business, right? So while working from home is picking up, and that demand, which we are now seeing, has largely been priced in last year, because if anybody to buy ACs to work from home, they'd have already done it last year, I've imagined, when work from home sort of picked up steam. But of course, commercial office space is slowing down tremendously and continues to slow down this year too. We are also not going away on holidays. Of course, people are spending some more time at home, which of course could be positive for your business. But what is the sort of growth targets you're working with for room AC specifically?
So I'll cover this in two parts. So as far as this work from home is concerned, now, if you see now, this wave of COVID is also impacting relatively smaller towns, tier 2, tier 3 towns. And a bulk of our sales also happens to come from these towns. So with the extended work from home reality now in relatively smaller towns, we again believe that that demand, pent-up demand, or that extended demand, like what we witnessed last year pretty much from the larger towns, should happen again from these smaller towns as well. And even across metros, this work from home is not going anywhere, at least in FY22. So to some extent, it should repeat. Now, whether it repeats at the same levels of last year or not, we will get to know. But there is indeed that opportunity that should continue. Now, as far as your observation on office spaces, obviously are shut down or partially shut down, and that expansion is not going to happen. Now, there we see a part substitution happening by our central air conditioning products, finding newer customer segments such as hospitals, pharmaceutical companies, and also keeping in mind that there are some essential elements or essential services like banks, which are still continuing. Government offices are continuing, even if it's not 100%. So there will be some demand that will continue to arise from these segments. And the capex that is now seems to be lined up, whether by government or private players on the healthcare side in terms of new hospital capacities, we will find good opportunities. Just to share with you, in the second half of April, despite the lockdowns, our commercial air conditioning business, the order book has been quite wonderful and quite encouraging for us. So there will be some substitution there as well.
Neeraj, you did mention and talk about the room AC business. Well, one quick question before we move on to commercial refrigerators. While there is that demand coming in from making homes more comfortable and sort of workable with work from home, what about the demand from the commercial office space? Because that has slowed down dramatically due to this, right? We have really no holidays, I know, so people will be working from home and that could support your business. But internally, if I had to ask you, could home demand for room ACs offset the slowdown in commercial office space that we had anticipated last year or set out those growth targets at least?
Yes, of course. So you are absolutely correct in your assessment that the demand for commercial office spaces, not particularly, let's say, customers such as companies in the IT and ITES space. Obviously, most of them are working from home, and their need to expand their office space requirements will, for some time at least, will not be there. So that's a reality. Now, of course, to some extent, this enhanced requirement emerging from people who are going to work from home and multiple, let's say, units needed inside the same residential space, because if there's a couple who are all working from home and kids are studying from home, so obviously that gives rise to multiple units of room ACs that need to be now installed or replaced, as the case may be. Earlier, probably the family might do with fewer units in that home. So that's one very obvious requirement, and that will continue to fuel. Now, as far as the real, I would say, substitution or the new emerging demand for the commercial air conditioning equipment, because that's where our other commercial air conditioning customer segments really come in. So for instance, the healthcare, the pharmaceutical, and the other related customers which are still working in a working mode. So, for example, banks are working, right?
Right.
And so are essential services. Now, they still need central air conditioning to be done. So while offices, you're right, but then there are customers who are still operating and they need to carry on with their project. So we have, in fact, in the month of April itself, our central air conditioning business has seen some very good traction in terms of their own orders. We anticipate or we expect increase in capital spends as far as the entire healthcare space is concerned, be it by the government or even the private hospital players. That should give rise to some more demand for our equipment as well. So there are some trade-offs there, and yes, partly you're right, the residential space will also fill in some of this probably lost demand.
I'll talk about healthcare in a minute because that's another space you were betting big on. Commercial refrigeration, how is that business looking? I mean, it's one space that the management was very optimistic on. What is the sort of outlook you're working with in the next couple of quarters? Deep freezer sales, I'm sure, are under pressure due to slowing down of ice cream sales, and the summer will be behind us in less than a month now.
That's absolutely true. So traditionally, yes, you're absolutely right. Our deep freezer, our commercial refrigeration business does cater to ice cream manufacturers. And this is the peak selling season for ice creams. And obviously, because of the lockdowns, there is an impact over there. However, again, in that product category, we have seen substitution of customer demand now emerging from pharmaceutical companies, hospital. And this is all I'm talking about, either the cold room solutions that we offer to the hospitals or to the pharmaceutical or even the entire pharma supply chain. some very specialized medical refrigeration equipment that is again needed by them. Now we have also seen some very interesting traction happen in the entire food delivery. So what's going on for the last many months or many quarters is, while restaurants, QSR chains, now they are shut down or they are partially shut down, but mostly across most states, home delivery of cooked food
has picked up,
is permitted and has picked up. You're absolutely right. So obviously a lot of these commercial kitchen in the back end do need refrigeration equipment as well, and that's where we fit in. Last but not the least, this entire vaccination supply chain, which from a storage point of view, we are very well equipped. So be it the cold rooms, be it the ice-lined refrigerators, even vaccine transporters that are needed. Most of the vaccines that are currently being used in India, both Covishield and Covaxin, the kind of storage, refrigeration storage support they need, we have an entire range of equipment that can provide that. Now, this vaccine related, we have also been saying that is going to be a limited period opportunity. Obviously,
absolutely,
part of it started last year, and it does continue in the current year now, with the private hospitals being permitted by the government to start inoculating. Now, of course, currently we are seeing a supply side challenge. However, hopefully in the next couple of months, once the supply side
the balance of trade-off should take place.
So we think hospitals will need, many more hospitals, private hospitals will need some equipment. So we see this opportunity carry on for the next few months or couple of quarters.
So fair to say, Neeraj, that gap that was missing is now going to be bridged or can be completely bridged by this new sort of corona-related demand that's coming?
To some extent, yes, because obviously the cornerstone and the foundational customer segment here, which is the ice cream manufacturers, of course, that gap should get filled to some extent. Now, our hope or our optimistic view is that, see, by the time, let's say and this assumes that there won't be any major third wave with that assumption.
Fingers crossed. Let's
say by festival, by the time the festival season happens, again, Q3, that kind of coincides with the marriage season in India, Q3. And so that does see again some demand for ice creams picks up. And if that were to happen by Q3, like we saw that last year, and this is based on last year's experience, because our commercial refrigeration business was actually the one to pick up very quickly in Q3. So again, if that experience is anything to go by, we think we see another reason by Q3, Q4, again, some part of ice cream segment should also start coming back to some extent.
Also, now just moving on from there, I want to talk to you, Neeraj, about margins, and I think this will be sort of completely up your alley. What is margin picture looking like right now? Commodity prices have been on the uptick, which I would imagine would keep margins under pressure. Price hikes are going to be difficult to take because I'm assuming, again, there's a built-up inventory, which is quite high. And also, let's not forget all the cost saving that happened last year has already priced in and is already at play, right? So there's no sort of further cost saving that we're working with on the operational side. How are you sort of working with it in terms of outlook on margins?
Right. So let me deal with this in 2 or 3 buckets. So firstly, let's talk about the price increases. Now, we started experiencing this headwinds on input cost increases, both in terms of commodities, whether it was copper or aluminum or steel, as well as ocean freight. So a lot of that headwind had actually started in Q3 last year and continued all the way through till Q4. So on the pricing side, we took a price increase in January, ranging from 5 to 8% across various SKUs. Now that, of course, was with the intent to try and absorb whatever input cost increases had already started to happen by that time. We reassessed the entire situation somewhere in the month of March, and we felt that this 5 to 8% might not be sufficient, because initially we felt that the commodity situation will start cooling off, which was not happening by February, March. So we went ahead and decided, and we implemented another round, the second round of price increases of, this time it was 3 to 5% from April, effective from April. So price increase to the extent it was needed and to the extent we believed or we felt market will be able to absorb or should absorb,
Right.
have already been done. And beyond this point, we don't believe that any further price increases either will be required or are necessary at this point in time. Now, coming to the cost side of this equation, the operating cost I'm talking about. Now, of course, so there were certain cost optimization opportunities which were available last year, which have been implemented. Now, some of that will continue into FY22 also, because to the extent optimization was linked with the operating model changes caused by the again the lockdown disruptions. So as an example, let's say product launch, which typically would happen in a physical format, and they have started happening in a virtual
Virtually.
format.
Yeah.
We don't think that should change in a hurry, in a rush. So some of that continues. See, we do have quite a bit of variable cost or discretionary variable cost in our portfolio. So, for
Business.
example, the spends on advertising, marketing,
Hmm.
even promotion. Now, if the stores are shut, then
There's no
obviously
promotion
spends on
activity.
the in-store demonstrators is going to come down. So that is in a manner of speaking semi-variable, because we can take a call as and when the market improves, we can step that up, and if market is not favoring, we can always pull that down. So some and substance of this cost equation is that to the extent we still have the ability, or we do have the abilities to moderate the cost, the operating cost, we are doing that. Inventory, you talked about the last point. Inventories, yes, to the extent of probable lower than I would say expected sales in the month of May.
Right.
There will be a little higher inventory, but something not extraordinarily high. I mean, last year we have seen a far greater challenge because the inventory creation was not keeping in, so this unanticipated disruption. So last year we had a much bigger challenge. This year it won't be to that same order in magnitude, and we feel that by the end of Q2, whatever extra inventory we will be having towards the end of June should get liquidated. So we don't see a challenge beyond September as far as inventory is concerned. Now that inventory will come to our help as well in this context of input cost headwinds, because whatever input cost had to be absorbed, so inventory is created substantially. So bear in mind that our inventory creation starts somewhere in Q3 and Q4. That's where we
Right.
start ramping up our production. And this year, in fact, we had planned for a 20% growth in Q1 over, of course, Q1 of FY20.
Right.
With that goal or that aspiration in mind, the inventories have been created. So now, even if the commodity prices were to remain a little hard for the next 2 or 3 months, we are just going to sell the inventory which has already been fully
Low
loaded up
cost.
as far as that cost is concerned. So
Right.
it's in that context we think that the margin uh, performance, specifically in our segment 2, which is unitary products, we have already reached, you can see, if you see Q3 and Q4 of last year, we are now clocking close to 8% across both these quarters in segment 2. We see no reason why for the full year as well a similar range should not we should be able to get to that range. Of course, our aspiration is to start reaching a double-digit margin profile in segment 2,
Right.
which we will. But of course, FY22, we think we should we should be able to maintain this 8.5% kind of a range.
Right, Neeraj, we're running out of time, but one quick question before I have to let you go. Any sort of new launches lined up for India? I know we are a cost-sensitive market, and it's a very different sort of product offering we have for our country. And also, any sort of pickup on the export side, which would potentially offset the slowing demand, if there's any that's expected. And also, do you think life should normalize from a business angle for you, especially by the end of the year? I mean, because you will be taking a lead in telling us what sort of expectations we as citizens can also have then, right?
Absolutely. Uh, okay, so as far as the product launches are concerned, we've already launched a very comprehensive and a very interesting range of around 72 SKUs. As far as the room ACs are concerned, we did this in the months of February and March, and some very interesting products where the needs and the features which we are now launched are quite very competitive and very attractive for the dealers and distributors, and of course for the end customers. Around 30 out of these 70 odd SKUs are going to cater to what we are calling mass premium segment, which is belly of the market. Now, these are all priced highly competitively because they have to cater to that mass segment. However, the premiumness around our product quality, product reliability, and product performance, which Blue Star branded products are very well known for, we are ensuring that all those promises are embedded in these products.
Yeah.
So it's a very interesting range where, because they are still meeting the reliability, performance, and quality parameters, yet priced competitively. So around 30 SKUs over there. Now, as the markets open up, of course, we will see some more traction on this entire portfolio. In our commercial, in our central air conditioning products, we have expanded the range of our VRF products. There now we are almost at a number 2 level, number 2 position in terms of market ranking, with something what is called side discharge VRFs. So that is that finds many more end applications, in addition to, of course, some larger capacity chillers that we are now selling. So there is an expansion of portfolio there as well. Around our commercial refrigeration products, I talked about the entire healthcare, pharmaceutical products which are already being sold. I would like to also talk about the supermarket refrigeration products in that category, because with and we have all experienced the relevance and importance of whether it's the small format kirana store or the large organized or medium sized or large organized retail, the supermarkets and the modern retail. So we have a very comprehensive range of products which are now finding good traction in this customer set as well. So quite a few things lined up as far as products are concerned. We are ready to go.
Good luck with that. I just hope for all our sakes, those targets are met, of course, as a consumer of Blue Star, and more importantly, as a nation as a whole. Thank you so much, Neeraj. Always a pleasure talking to you. Be safe, and we'll speak soon.
I wish you the same. Thank you very much.
Thank you.